Good morning, friends and fellow traders. This is Doug Campbell with Right Way Options, coming to you with the Friday edition of the morning market preparation video for March 2nd, 2018. Well, yesterday, doggone it, we were all kind of watching this. I know I was really watching this, hoping that we could get a hold in here. Well, I realized we'd already given up the 50-day moving average, but I was hoping this would hold in here, and at a bare minimum, we would hold right in here. And then we got news that of the president planning to institute tariffs on aluminum and steel, and the market just kind of didn't like that very much. He didn't call me, and so I couldn't give him any advice on that it would probably affect the market, and I'm quite confident that that wasn't his concern when he made that decision. So when things like that occur, it's out of our control. Obviously, most everything in the market is out of our control, except how we plan our trades and how we decide we're going to take risk in the market. Yesterday, clearly, things kind of broke down here, and we have a pretty ugly pattern. Looking at this chart, we have to now assume, after breaking that support, that the possibility of a retest of this low is possible. And we also have to consider the fact that it may not stop there. We could travel right on through and kiss the 200-day moving average here on the diamonds. So that would be a typical blue ice failure pattern. Now, it doesn't have to go there in a straight line, but the way this market acts right now, it's an all or nothing market. Either we're absolutely gleeful or we're absolutely in the dumps. And there's nothing in between. We haven't calmed down after this shakeup. And so it wouldn't be too surprising to me that we, if we did just really take off and just sink hard, panic set in and just a really hard move lower. It wouldn't take much to trigger another 1,000-point down day. Now, having said that, there's also the absolute possibility that we could catch a higher low here and rally back to potentially another failure point, and that'll be really critical in here, because if we fail again, chances that 200-day on the diamonds, highly likely. So kind of keep that in mind as we move forward. Now, if we can catch that low, honestly, it would be a really big surprise to me to see us break the downtrend in a first move. We might rally back up and consolidate and then take a shot at breaking it, but that would be kind of a surprise, at least with in the current environment, with all the kind of volatility and fear that we see currently welling up in the market. Let's take a look at the SPY. Now, I would say that the SPY is a little bit better condition because it held on right here, kind of the center of that little range. That little support area just barely held on there with the end of rally yesterday. But now this morning we're gapping down below that. And, a big gap down, we can sometimes, see buyers come right in to support that. And if we were to get that support coming in and get back above this level, that could be a critical saving point for the market. Now, we've still lost this level of support right here. And that is going to be, pretty important. If we can hold here and bounce back, we need to get back above that and hold on. I got to tell you, my confidence level is not high on that, at least in a first attempt. So I think all indications are we're likely going to sink lower. We're likely going to see a little bit of panic come in to the market today. Currently, Dow futures are pointing down 260 points at the open. They've been bouncing around between 195 and and 200, and now we're down 250 and 260. And that's the thing in this market that I want to point out, is that when we have the capability of moving that quickly in just minutes, and literally once we gave up after that news yesterday, after we gave up this support, it literally was minutes that we came all the way down here. So, and in the Dow, that meant more than 100 points. So when we have the capability of swinging 100 points in just minutes, that tells me that I have no edge as a retail swing trader. Now, I've been trading for a long time, 28 years in trading, 13 years now as a full-time trader, supporting my family, put a couple kids through college on trading profits. I know for a fact that I don't have to trade every day to be successful, that I can stand aside at times when I feel I have no edge and wait for better days to come. Now, when we swing that much, that fast, I don't, unless you are a very adept and very fast intraday trader, that's about the only way you're going to be able to capture an edge here. We can swing up 100 points and then reverse it just as fast. And even the best of buy signals can get wiped out in just a really quick move. So for me, I don't feel the need to fight that. I feel like it's perfectly acceptable for me to just stand aside, put my feet up and watch the show, pop some popcorn, and when this settles down, I'll be back in and I will have preserved my capital. I'll be ready to trade. My confidence will still be there. So consider that. I'm not going to presume to know what's right for you, but I'm telling you, for me, I'm not a day trader. I don't want to be a day trader. And as a result of that, my swing trades, I just don't have an edge here. So I'm going to stand aside and just watch and wait for better trades to come. Now, it's possible that could shift even in a day, but for now, that's kind of where I'm standing. Let's take a look at IWM. Now, IWM gave up the 50-day moving average first, failing at support, and has moved significantly lower. There's a high probability that the 200-day will be attacked here on IWM, and possibly even lower. It can make a new low pretty easily. We have now you got to squint just a little bit, but there, if you look, there's a bit of a head and shoulders top here now on IWM. Not a pretty picture. Let's just hope that if we do pull back down here, we can double bottom, and then get back to some better trading. We'll see. We'll see. All we can do right now is, I have no idea. There's no clues as to where this will stop, when this beating will end. And so why play in it? Just wait for the change to happen. On the Qs have been the strongest index of all of them. This double top high certainly does not look good here. And there's a pattern that we talk about in the trading room, the bearish M pattern. And that bearish M pattern is clearly visible right here. Not a good sign for the Qs. However, it is positive that the 50-day moving average is still rising, and the fact that the Qs managed to hold on to that 50-day moving average yesterday. That's a good sign. Now, if the buyers can step in and support that, awesome. But as you can see this morning, if we look right here, looks like the Qs are going to gap below that 50-day moving average. So be prepared for the idea that panic could set in, that this could be an actual double top, and we could be in for more downside in the market. The clues are there. There's plenty of clues, plenty of warnings to tell you to be careful and to not fight this market. Let's take a quick look at the VIX. If you guys remember, on Monday I was suggesting that we need to be really careful of this area right here, because that's price support in the VIX, and suggested that we need to watch that closely. Well, unfortunately, it turned out to be correct, and we held that 50-day moving average, and we held that price support, and now we've rallied 3 days. At one point yesterday, we were above a 25 handle on the VIX. Significant volatility. It's going to be very challenging for a lot of traders. Now this morning, we can expect that VIX to gap up. It wouldn't surprise me at all if we're looking at a 27, 28 VIX this morning. So watch for very extreme moves. We can, when we reach those levels like that, we get very fast price action, and literally the market can kind of leap points. It will leap up 10, 15, 20 points on the Dow and then leap down 20 points. I mean, it can just leap all over the place. That makes it very, very challenging. So be really careful. If you decide to trade, my suggestion first would be reconsider. Second would be to trade very, very small. And make sure you've done everything you can to have an edge and you understand the risk before you enter that trade. Let's take a quick look at T21.22. Now T21.22, we were approaching these lows down here yesterday, that bullish reversal zone, and this morning we're gapping clear down. So we're now down 270 points in the Dow futures. So it's getting worse as I talk here, and we could see this blow right down into here, clear to the bottom. That can be good, but remember, 1,000-point moves have happened right over here, and they can happen again, and this won't stop it. So be aware of that even though we may be approaching the bullish reversal zone, we can sink right through there for a short period of time. Okay, keep that in mind. Keep yourself safe today, guys. Be cautious. There's no need to get involved in this dogfight. It'll eventually calm down, and great stocks will be on sale then. So let it happen. Let it occur. Stand aside, protect your capital, and when it's all over, when all the shaking is done and everything calms down, there'll be great stocks at great prices. For the first time in a long time, we're going to have an opportunity to buy stocks at a discount. So just let it happen. Preserve your capital so that you're ready when that occurs. Everyone, I want to wish you a fantastic day and a great weekend. Take care of yourselves. And if this is the first time you've seen this information, please do me a favor. Click that subscribe button on YouTube and the follow me button on Facebook. Click those thumbs up buttons, and always, always, always feel free to share this video with any friends and family that you may think could benefit from this information. Everyone, take care. Have an awesome weekend, and I will talk to you all very soon, bright and early Monday morning.